It's been over a decade since the financial crisis. The Fed cut rates and introduced easy money. Now, while Wall Street cheered, Main Street saw a sluggish recovery. I'm joined by Danielle DiMartino Booth at the Nasdaq Market site. She's the author of Fed Up, an insider's take on why the Fed Reserve is bad for America. She's also the founder of Quoll Intelligence. Danielle, great to have you here.
Happy to be here.
Well, we're here at the beginning of the year and we're still talking about tariffs as well as what will happen in terms of the trade war.
Yep.
And here we are in the midst of a partial U.S. government shutdown. So there are a lot of concerns in terms of politics as well as geopolitics. So where do you think we are in the so-called recovery cycle?
Well, I think we're either through the recovery cycle or very close to being through this recovery cycle. And the two major elements that you highlight, that of geopolitical tensions and the shutdown here in the United States, they're both tremendous drags on confidence as well as on economic growth as a whole. It depends on which brokerage house whose forecast you want to use, but approximately 1/10 of a percentage point of GDP growth is shaved off every week that the U.S. government is shut down. So we already know that there's pressure going into the first quarter. We saw from the ISM manufacturing report and the non-manufacturing ISM report, both of them, that backlogs, which is something that we follow very closely at Quoll because backlogs essentially speak to future demand, both of them fell down to the 50 line, which is just north of a contracting economy, which echoes a lot of what we're seeing in China and in the major European economies.
A lot of the organizations that forecast economic growth worldwide, including the OECD and the World Bank, they have shaved off part of their percentage for global growth this year as well as next year. And as you mentioned, with this partial government shutdown, economists do estimate that 0.3% gets shaved off the economy. And we also don't have a lot of the important data that will help inform us going forward. So that's very concerning. So what do you think of that?
Yeah, well, there's already rumbling. You know, what if it's more than just the new home sales not being reported because census is closed? What if it's as big as the fourth quarter GDP report not being released? And these are things that will really start to chip away at investor sentiment here on Wall Street. So I am concerned about that because we're really having to fly partially blind while the government is shut down as it pertains to economic data. The other flip side of it is that the withholding tables have recently been changed with the new tax bill. And so there are millions upon millions of Americans who didn't realize that they hadn't been withholding enough, didn't withhold enough from their paychecks. These are people who expect to get tax refunds year in and year out. And that money always gets filtered directly into the economy, 100%. And millions and millions of them, I read an estimate that said 30 million of them did not withhold enough and will not be getting those refunds. So that's going to be a drag going into the second quarter as we head towards tax day as well.
That's very concerning on top of everything that's happening. But here we are at
with
one
the
of the
IRS
major,
closed.
Yes, exactly. And here we are at the Nasdaq Market site. A lot of people were paying attention to IPOs. They'll continue to monitor what happens in that market. But of course, with the SEC as well as other federal agencies partially closed, that does affect filings for going public for companies. So,
absolutely it does.
That is important. But I do want to highlight housing. I know that you've talked about the discrepancy between Wall Street and Main Street, what the difference is in terms of how they're dealing with the housing markets and changes. What do you see on the horizon?
So I think that we saw weakening in housing really starting in the early spring of 2017, and that took a lot of people by surprise. It did not take us by surprise because affordability had become such an issue, and we're watching the gradual rate hikes come through once a quarter, and all of a sudden in 2017 the average monthly mortgage payment in this country increased by 20%. That is a big delta. It doesn't really matter that mortgage rates aren't where they were in the 1980s. It matters that that average monthly payment became that much more out of reach. Now, if we go into recession in 2018, it's just going to make a bad matter worse in housing. And that really is my concern, is that we can start to see house prices falling.
And another thing I want to ask you about in terms of the global economic sphere and central banks is regarding global gold reserves. Now, more nations bought reserves or upped their holdings last year. China did, Poland, Hungary. Those are countries that haven't upped the reserves officially in several years. So what do you make of this?
And Germany repatriated its entire gold stockpile as well last year and started growing its army for the first time. So these are subjects that actually segue into what happens in the world if the political leaders start to see the potential for a currency war morphing into something a little bit more serious.
Sure.
And gold is the ultimate hedge, regardless of whether you're talking about your investment portfolio or your country. And so I think that these are indeed troubling signs, and things become much more heated up much more quickly if China's possibly in its biggest downturn since the crisis. If, as we've seen industrial production, factory orders, we've seen them come crashing. In Germany, it was supposed to be a one-quarter aberration in the third quarter that the German economy contracted. Now we know that Germany's in recession. So that is very problematic when you add up China and Germany. They're the first and third largest exporting nations in the world. And then you bring that back around to geopolitics, and there's nothing more difficult for a politician to have to combat than people losing their jobs.
And since you brought up geopolitics, I do want to ask about what areas you're paying attention to the most. Of course, we'll continue to see what happens regarding China and the U.S. for the trade war, but there's been talk about another summit happening between the U.S. as well as North Korea. What do you think really matters?
Well, I'm not so sure that people have the same amount of anxiety when it comes to North Korea as they do when it comes to China.
Sure.
Because again, one of them is very economically impactful and the other is not. You do get concerned about alliances and allies. And when you see things like the Saudis and the Iranians and the Russians, and because of the low oil prices, that adds another element of uncertainty because a lot of countries' budgets have really been hammered as oil prices have come back down towards the $50 level.
Okay, well, Danielle, thank you so much for your insight on Wall Street as well as Main Street today.
Absolutely.